you see are building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth.
Cathie Wood's ARK Invest has taken a significant step forward by submitting a second amended application for a Bitcoin spot exchange-traded fund. This latest version, filed on October 11th, introduces several crucial updates, including additional risk warnings pertaining to the Bitcoin network's potential influence on the ETF's price. Among these adjustments are concerns related to electricity consumption, community-driven updates to Bitcoin's source code, and escalating competition within the industry. These risk disclosures emphasize the evolving landscape in which Bitcoin operates, and the significance of these considerations for potential investors. Moreover, the application outlines the custodial arrangement for the ETF, with Coinbase selected as the custodian. Notably, Coinbase is mandated to securely hold the assets backing the ETF in segregated addresses on the Bitcoin blockchain, ensuring their separation from corporate or other customer assets. This commitment to transparency and security underscores the efforts to maintain the integrity of the ETF's underlying assets. Simultaneously, the crypto world has been captivated by the ongoing trial of Sam Bankman-Fried, the co-founder of the FTX exchange, who is facing charges related to the mingling of user funds. This trial carries significant implications for the industry and its regulations, adding another layer of complexity to the evolving landscape. Amid these developments, Cathie Wood has provided her insights on the bullish and bearish scenarios for Bitcoin, offering a comprehensive analysis of the factors influencing the cryptocurrency's future.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%, that may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets, but we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Mm-hmm. Sovereign treasuries 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
ARK Invest, in its pursuit of the ARK Spot Bitcoin ETF, resubmitted its application this April. This resubmission came in the wake of a rejection in 2021, which was just 2 months ahead of heavyweight BlackRock filing its own application in July. To align their application with BlackRock's and address the Commission's market manipulation concerns, Cathie Wood's firm amended the application, even including a surveillance sharing agreement. In the latest amendment, only minor edits and details have been incorporated, as noted by Alastair Mill, a prominent Bitcoin investor and co-founder and CIO at Alton Digital Currency Fund. Now, let's delve into Cathie Wood's perspective on these developments.
So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure because they could never say something like that. I just know from how we have discussed Bitcoin with them that they really understand it and they understand its merits. Most important. So this is Gary Gensler. Why he allowed, and I will say he because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing.
Let's delve into the concept of exchange-traded funds and their significant impact on the financial system. ETFs, which blend characteristics of both stocks and mutual funds, have evolved as a powerful investment tool. They are designed to provide diversification by holding a collection of assets like stocks, bonds, or commodities. This approach allows investors to mitigate risk by not concentrating all their investments in one asset. One of the notable advantages of ETFs over traditional mutual funds is their tradability. ETFs can be bought and sold throughout the trading day, providing real-time flexibility similar to individual stocks. They often come with lower expense ratios, making them an attractive choice for cost-conscious investors. This cost efficiency is partly due to their passive management style, with many ETFs tracking specific indices rather than actively managing assets. Transparency is a defining feature of ETFs. They regularly disclose their holdings, enabling investors to make informed decisions. Additionally, ETFs offer various trading options, including buying on margin or short selling, supporting both bullish and bearish market strategies. Their unique creation and redemption process often results in tax efficiencies, reducing capital gains distributions. The wide variety of ETFs available in the market caters to diverse investment interests, from broad market indices to specific sectors, commodities, currencies, and thematic ideas. In conclusion, while ETFs offer numerous benefits, investors must be aware of the associated risks and conduct thorough research before considering an investment. If you have any thoughts on the likelihood of a Bitcoin ETF emerging this year, please share them in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.